Hello friends. Friends, we will continue with our discussion on the chapter of retirement of a partner. Right? In the last lecture, we discussed about revaluation of assets and liabilities. Like on the date of retirement, we have to revalue our assets and liabilities, and any profit or loss on the revaluation that belongs to the old partners in old ratio. I told you in that lecture that any profit or loss prior to retirement, that is prior to change in the partnership constitution, belongs to old partners in old ratio. Right? So any profit, any loss prior to the change in the partnership constitution. Change in partnership constitution means admission of a partner, change in profit sharing ratio before there is a retirement of a partner. Any profit or loss that belongs to a period before there is a change in partnership constitution that belongs to the old partners in old ratio. That's why in case of the revaluation of assets and liabilities, any profit or loss, like remember we prepare the revaluation account. In that revaluation account, any profit or loss that belongs to old partners in old ratio. Please remember this. This is a very, very important point. If you remember this, you can easily remember the whole topic. Right? Now, in this lecture, we are going to do one more topic, that is treatment of reserves and accumulated profits and losses. We have done this topic in chapter 3 also and in chapter 4 also. Chapter 3 is change in profit sharing ratio. Chapter 4 is admission of a partner. We have done this topic in detail in both the previous chapters. Right? So here I will just brush up through this topic. Okay? So first of all, what are the reserves? What are the reserves? Reserves are amount set aside out of profits. Clear? The reserves are the amount set aside out of the profits to meet any future contingencies. To meet any future contingencies. Right? We set aside an amount out of the profits of the year to meet any future contingency. Right? So this is nothing but our profits only, because we have taken some amount out of the profits only. Right? On the date of retirement, you have some reserves and accumulated profits. You have some profits that are shown in the balance sheet. On the liability side of the balance sheet, we have some reserves. We show the profits also. Right? On the date of retirement, we have a balance sheet and we have the reserves and profits. How to treat that? I just told you that any profits that belong to a period before the retirement that belongs to old partners in old ratio. Now these reserves and profits belong to a period when the retired partner was also a part of the firm, isn't it? Because we are getting a balance sheet on the retirement date. So before that, the reserves were created. What are reserves? Profits only, because it is a part of profits only. So I can say that these reserves belong to the retired partner also. Absolutely yes. So I will say any reserves shown in balance sheet on the date of retirement of a partner must be distributed. That belongs to whom? All partners. What do you mean by all partners? It belongs to old partners, including the retired partner. Must be distributed among old partners in old ratio. Clear? That means any reserves, any profits, or any accumulated losses that are appearing in the balance sheet on the date of retirement, those must be distributed among the old partners in old ratio. Why? Because any profits, any losses that belong to a period when retired partner was also a part of the partnership firm, he deserves to get a part of those profits or the losses, because he was a part of earning those profits or losses. These reserves are nothing but the part of profits only. These reserves were created when the retired partner was also a part of the firm, right? So these must be distributed among all the partners, among old partners in old ratio. Clear? So what will be the journal entry for this? If you have gone through the previous chapters, you will easily remember the journal entry for this. We'll say journal reserve account debit, profit and loss account debit. This is profits, okay? Then we have one workman compensation reserve account debit. Then we have investment fluctuation reserve. Right? To old partners capital accounts. In which ratio? In old ratio. Right? Any reserves, any profits, any losses that are appearing in the balance sheet on the date of retirement of a partner, that belongs to old partners in old ratio. Same way, if there are any accumulated losses appearing in the balance sheet, the loss appearing on the asset side of the balance sheet, then we can say the journal entry will be old partners capital account debit to accumulated losses account. In earning those losses also, the retired partner was a part of the firm. He cannot deny that in case of profits, I will get the profits, and in case of loss, I am not responsible for loss. He is equally responsible for the loss. Before the period, there is a change in the constitution of partnership. Before his retirement, if there are any losses in the firm, the retired partner is equally responsible for that, and his capital account should be debited for those losses. Clear, friends? Now, we know workmen compensation reserve and investment fluctuation reserve. For the detailed explanation of these two reserves, you must go through the lectures of chapter 3, that is change in profit sharing ratio. Briefly, if we talk of the workmen compensation reserve, what is this? This reserve is created out of the profits to meet any future mishaps related to workers. In your factory, there are 100 workers who are working, and one of the workers during the work hours gets injured. Right? So you have to spend some money on that. For that, you have already created a reserve. Suppose there is a worker who gets injured, right? And you have to spend 2000 rupees on treatment. You have already created a reserve of 10,000. You have set aside amount from the profits, 10,000 amount from the profits for workmen compensation reserve. Now a worker gets injured and the amount to be spent on the treatment is 2000. Now what you will do? You will take 2000 from this reserve and the balancing reserve will be 8000. Clear? This is workmen compensation reserve to meet any expenses on the contingency to workers, any injury to workers during the work time. Clear? Then investment fluctuation reserve. What is investment fluctuation reserve? You have a reserve of 10,000. You have one investments, right, whose book value is 28,000. You go in the market to know the market value of the investments, and the market value of the investments turns out to be 25,000 only. Clear? That means you have an asset of 28,000. You go to the market, you can sell it for 25,000. Is it a profit or a loss? Sir, it is a loss. You have an asset of 28,000. You go in the market, you will fetch only 25,000. There is a loss of 3,000. Now this loss on investments we will meet through this investment fluctuation reserve, and the balancing reserve will be 7,000. So why this investment fluctuation reserve is created? To meet the loss on the book value and the market value on investments. For that purpose, we create investment fluctuation reserve. There is a fluctuation in the market value of the investments. Accordingly, if there is a loss on account of difference between the book value and the market value, that loss will be met through investment fluctuation reserve. Clear, friends? So this is about reserves and accumulated profits and losses, that any reserves appearing in the balance sheet, any profits appearing in the balance sheet, any losses appearing in the balance sheet on the date of retirement of a partner belongs to old partners in old ratio. Clear? Now, we have seen in the previous lectures, we have seen that we have to pay a lot of amounts to the retiring partner. Like in case of goodwill, we have to pay his share in the goodwill. Clear? Then revaluation of assets and liabilities. There also we have to distribute any profits or losses in the old ratio. He will get his share there also. Then reserves, he will get his share here also. So in totality, we have to find out what we have to pay to the retiring partner. We definitely have to pay some to the retiring partner, right? His share of goodwill, profits on the revaluation of assets and liabilities, then reserves and profits that are appearing in the balance sheet on the date of retirement. We have to pay some to the retiring partner. So in the next lecture, we will identify what is the total amount that is payable to retiring partner. Amount due to the retiring partner. Clear? So in the next lecture, we will start with a new topic, that is amount due to the retiring partner. Clear, friends? Thank you so much.